Slim was here.
The sound's on? The sound is on? Is this yours?
Oh no. You got mold in it? That might be yours. Yeah, okay. I got 3 cups.
Butler. They're good. I feel like
Butler?
more people are here. I feel like more people are here today than yesterday.
It's Carter. Yeah, I mean Delano.
And Delano.
I went ahead and checked Hobb off, so he's
Oh,
going
you
to
don't know.
come.
You told Black?
I told Blackbird to do 5.
I made a draw before my turn.
Who's doing pledging? Amanda, who's doing pledging?
I'd like to call the Senate to order. Mr. Secretary, please call the roll.
Barnett, Barrett, Blackman, Blackwell, Blunt, Boyd, Branning, Bryan, Butler, Carter, Kaufman, Chazanal, Chisholm, DeBar, Delano, England, Fillingame, Frazier, Harkins, Hill, Hobson, Horn, Jackson of the 11th, Jackson of the 32nd, Johnson, Jordan, Kirby, McCon, McDaniel, McClendon, McMahon, Michelle, Moran, Norwood, Parker, Parks, Polk, Seymour, Simmons of the 12th, Simmons of the 13th, Sojourner, Sparks, Suber, Tate, Thomas, Thompson, Turner Ford, Whaley, Wiggins, Williams, Witherspoon, and Younger. Mr. President, we have a quorum.
Thank you, Mr. Secretary. First, we have the invocation given by Senator Josh Harkins and followed by the Pledge of Allegiance by Senator Dean Kirby. Senator Harkins.
Thank you, Mr. President. Matthew 14 through 16, you are a light of the world. A town built on a hill cannot be hidden. Neither do people light a lamp and put it under a bowl. Instead, they put it on a stand, and it gives light to everyone in the house. In the same way, let your light shine before others, that they may see your good deeds and glorify your Father in heaven. And it is our prayer that everything we do here, we do to glorify our Lord. If you would please bow with me. Dear Heavenly Father, we thank you for this day. We thank you for the opportunity to be here in a free country. We ask for your hedge of protection around all of those that are traveling to and from the Capitol today. Be with our colleagues, get everyone home safely in this difficult weather. Lord, we just give you thanks for all the blessings that you bestowed upon us as a country and as a state. We just ask for your divine guidance in all that we do, that it may be pleasing to you, and just keep us ever mindful of the needs of others. In your heavenly name we pray. Amen.
Please join me in the pledge. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Good job. Thank you, Senators. Now to the reading of the Journal. Senator Blackwell, you're recognized. Have to cut his light on there.
Thank you, Mr. President. I move to dispense with the reading of the journal.
Senator moves to dispense with the reading of the Journal. All in favor signify by saying aye.
Aye.
All opposed, no. The ayes have it. Next to message and petitions, Mr. Secretary.
Mr. President, there are none.
Committee report. Senator Blackwell, you're recognized.
Thank you, Mr. President. I move to dispense with the reading of the committee reports.
Senator moves to dispense with the reading of the committee reports. All in favor signify by saying aye.
Aye.
All opposed, no. The ayes have it. Next to the readings of the titles of the bills and resolutions. I recognize Senator Blackwell.
Thank you, Mr. President. I move to dispense with the reading of the titles of the bills and resolutions.
Senator moves to dispense with the readings of the titles, bills, and resolutions. All in favor signify by saying aye. Aye. All opposed, no. The ayes have it. Now to introductions. Introductions, please. Senator Kirby, you're recognized.
Thank you, Mr. President. The first thing I'd like to do this morning is ask that we relax the dress code.
Motion to relax the dress code. All in favor signify by saying aye. Aye. Opposed, no. The ayes have it.
Thank you, Mr. President.
The two ties in the Senate voted no. Thank you, Senator Kirby. Now we're asked to introductions. Any other introductions? Seeing none, we'll move to the calendar, and we will start with Senator Harkins. You're recognized.
President. Thank you, Mr. President. I'd like to go to item 1, Senate Bill number 2822, and have the title read.
2822. Mr. Clerk, please read the title, Mr. Secretary.
Senate Bill number 2822, Mississippi Flexible Tax Incentive Act, create.
Make the usual motion.
Senator makes the usual motion. All in favor signify by saying aye.
Aye.
All opposed, no. The ayes have it. Please proceed, Senator Harkins.
I'd like to recognize Senator Parker to explain the bill.
Senator Parker, you're recognized to explain the bill. We're on number 1, Senate Bill 2822.
Thank you, Mr. President. Thank you, Mr. Chairman. And thank you for so many of you yesterday coming to the committee meeting to get a good background on the Inflex bill. I know some of you were not able to attend it, so I'm going to walk through exactly like I did yesterday and go through everything in detail for you this morning. First of all, as I've been mentioning as we've been going along, Inflex has been a couple years in the making. Economic developers, a number of people have been involved in this process. And so the good thing about it is we have buy-in from a lot of different entities on this. But to start, Inflex right now, the state has dozens of tax incentives, I think around 39, most of which are very complicated and some of which are never used. Inflex was designed to kind of make up for these inadequacies in that. And the capable professionals, their goal is to attract new businesses to our state and expand the businesses that are here already. So in kind of starting here, there are 3 things that Inflex is achieving or trying to achieve. And I hope everyone has a little handout If not, I think it'll be coming to your desk very soon here. But it's trying to streamline incentives in the state into one easy-to-use calculation based largely on investment, jobs, wages, and benefits. It's making this one flexible incentive competitive as compared to other states in order to attract business into Mississippi. And it is increasing transparency so that the public and economic developers understand whether the incentive is useful and fulfills its intended purpose. And kind of the catch line for this bill is that Inflex is performance-based, it's not promise-based. We've had instances in the past where I think we've made promises and those have not been, where businesses have made promises to us that have not been fulfilled. So the businesses provide their assumptions of what will be produced in terms of investment, jobs, and wages, but they will only receive the credit based on what they actually produce. So I'm going to do kind of a walkthrough on the bill, so if you have it where you can pull it up, I'm going to go kind of section by section. Section 1 just titles the bill as the Mississippi Flexible Tax Incentive Act. Section 2 goes into the definitions. There are about 28 or 29 definitions. I'm just going to touch on a few that I think are the key ones here that I think require a little bit of explanation. So in Section 2, subsection H, a base full-time job is someone working 1,820 hours per year. That is about 35 hours per week. And a part-time job cannot be combined to add up to be a full-time job. Multiple part-time jobs can't be added to make up a full base-time job as far as calculations go. In Section 2, subsection O, minimum job creation to qualify for Inflex will be 10 new full-time jobs. In subsection P there, the minimum qualified investment will be $2.5 million. And we gave a lot of thought to that, and that's where we kind of ended. And I did make mention to this in the committee too. There is, and I've talked to other senators about this, there is another group of business investors below that threshold who I think we need to look at in the future, making some incentives, or not necessarily incentives, but some allowances to attract expansion. And I hope maybe next year to have a bill ready on that accord. In subsection Q there, the full-time job is equal to what the base full-time job was in letter H. And then we'll go down to letter X, subsection X in section 2. A qualified project, an improved project shall include, and I'm going to reference you to this little handout, and let me turn to it here if I can find my copy. So if you're in this handout right here, that I think many of you should have on your desk, I'm going to reference you to the second page here, which is the Inflex eligibility portion of this little handout. And so these are the type of entities that would qualify for Inflex eligibility. Manufacturing, remanufacturing, assembly, processing, or a refinery enterprise or an expansion of such. Warehouse or distribution enterprise or an expansion. Research or research and development enterprise or an expansion. A regional or national headquarters or an expansion. Air transportation or maintenance enterprise or expansion. Data information processing or expansion, technology intensive enterprise or an expansion, a telecommunications enterprise or an expansion, a data center enterprise or an expansion. And then I didn't leave on the handout you have there, but it does also include a ship or vessel transportation or repair center or an expansion of such. And so those are the types of businesses or industries that are kind of the targets of Inflex. So we'll flip ahead to section 3 of the bill now. Section 3 is the application for the Inflex incentive, and that in the bill spells out that the incentive application shall include the business overview, and I'm going through subsections A through K as I mentioned these briefly here. Business overview, location, description, the investment proposed, if it's an expansion, the current number of jobs, the number of full-time jobs proposed to be created, the average employer wage proposed, benefits including health, dental, vision, or retirement, the time to create the positions, the affiliates of the industry, and an acknowledgement by the applicant to report as required, which we'll get into a little bit more when we touch on transparency. In section 4 of the bill, it's the certification and award of the incentive. Subsection 1 gives MDA the ability to evaluate and decide if the business truly qualifies. Subsection 2 says MDA will certify the project as a qualified economic development project and award the incentive and impose the mandatory conditions of the incentive. Subsection 3, upon issuance of the inflex agreement, the business may apply the incentive as a credit to offset in line 454 any state taxes except defined withholding taxes, and only 20% of an offset can be applied towards withholding taxes per year. The conditions in subsection 4 of section 4 is that the award is not transferable, the business must be in compliance with all laws to receive, and the business agreement with MDA must include provisions defining the project and the terms for recapture if the business fails to comply, which is one of the key words in this legislation, the clawback mechanism, or the incentive to actually do what you have promised. And a few more little notions there in section 4. Going on to section 5, this is the calculation and application of an inflex tax incentive. And I think what you're going to find as I explain this is that this will be very easy for you to explain as a senator to someone who's considering moving into your area. Whereas now, the application process for the multiple incentives we have are hundreds and hundreds of pages that are, it's a lot of legalese, it's a lot of just difficult paperwork to kind of navigate. But if we'll turn to this chart right here, blue, pink, and yellow, and I'm going to kind of walk you through the inflex calculation. The base calculation for the incentive, which is lines 546 through 570 of the bill, 1.5% of the total purchase or sales price of all manufacturing and processing machinery shall be a incentive that can be awarded. 7% of the total purchase sales price of non-manufacturing equipment. That would include items like computers, file cabinets, desks, chairs, those kind of things that are used throughout perhaps a new office. 2% of the total contract price or compensation paid to any contractor to construct a building or improvement to real property. And then we're going to get into, kind of the wage incentives here. 15% of the average employer wage times the new full-time jobs if the employer wage is equal to or more than 75% of the state and county wage. So that would be the base scenario and would basically require that employer to be providing jobs that are at least at that level. And if you kind of follow down underneath here, I've got two other scenarios I've kind of labeled as plus scenarios 1 and 2. In plus scenario number 1, which is lines 571 through 583 of the bill, if the project is a new warehouse or distribution enterprise or a new manufacturing facility and provides 50 plus jobs with a $10 million plus investment, and the average employer wage is 110% of the average state or county wage, and basically the employers are offering health and benefits covering at least 50% of the employee cost, then in that scenario, the employer would be eligible to receive an additional 30% of the average employer wage times the new full-time jobs. So the incentive there would be if you come in and you do this larger investment and you are providing wages that are greater than what are provided in your county or area right now, you have that extra incentive. Now that would only apply to these larger ones. So in plus scenario 2, this is more of the smaller projects, that are going to be just about everywhere. If the project is 25 plus jobs and the average employer wage is 125% of the state or county wage, and that 50% of the employees are offered, all employees are offered benefits that cover up to 50% of their health, dental, vision, other things like that, then they also would be eligible for an additional 30%. And so in that scenario, you would be looking at someone who is really making a good investment in your county or in your city, and bringing jobs that are, 1.25 times what the average typical wages are in the county. Okay, and I'm going to move on to Section 6. Section 6 just basically says that inflex, if used, will not allow double dipping. If you get this incentive, you won't be eligible to take another incentive. This is an either-or type of situation. Section 7, we're going to move into transparency and reporting to MDA. In line 663, we start to talk about what the annual report shall include. And I've also got in your handout something for you to follow along on that. So this is this page here. And so what that includes is the total investment made through the reporting year, the incremental investment during the reporting year, total number of base new full-time jobs, total number of full-time jobs at the beginning of the preceding year, total number of full-time jobs at the end of the reporting year, the average wage of the reporting year, the percentage and number of employees receiving benefits, a description of the benefits, the total Inflex incentive awarded to date, and a listing of any affiliates of the industry. In line 726 under section 7, it states that MDA shall prescribe a form for annual reporting. The thought on this is that it will be an easy form to include all of this information. It will not require a whole lot of work. If you remember earlier in the session, I mentioned a particular industry in my area that had missed a filing deadline because they just didn't understand the process. I think this will make things going forward a lot more transparent and easier for new employers in our state. Line 742, MDA procedure to revoke incentive for failure to file. So basically, if the employer or the industry does not keep up their end of the deal and send the information in, MDA will have the ability to revoke the incentive. Line 758 through 802, MDA will have the ability to adjust the award for failure to comply. And in this scenario, I'll explain it as perhaps a company has agreed to provide 50 jobs within a set amount of time, and if they realize they've only provided 45, it'll let MDA come in and instead of pulling the whole award from them, it'll make them adjust it to some degree to reflect the fact that they are moving in the right direction, but make that on-the-fly decision to, work with the company to be in the best interest of the county and the state. Line 803, if the award is adjusted below the incentive amount already claimed, DOR may charge the business an assessment to recoup it. So if someone has come in here and has used the incentive in maybe a fraudulent manner, this would basically say that an assessment can be applied to try to bring that back. And I know we've all heard and seen instances where that's occurred, and I know the AG's office has worked hard to try to develop a remedy to go after that, but I think having this in the statute will make it a lot easier to allow that process to actually take place. Line 816 provides for a 10-year expiration of the credit. I'm going to move to Section 8. These will move a little quicker. Section 8 says the state auditor may perform compliance audits. Section 9 says the MDA and DOR have the sole authority to determine the applicant qualification. Section 10, MDA and DOR shall promulgate rules and regulations. Section 11 is providing that businesses which apply and are approved for Inflex are permitted to take tax credits. Section 12 says that a provider provides that an employer required to deduct or withhold wages may apply for Inflex. Section 13 provides that the annual statement filed by an employer disclosing withholding for each employee shall reflect the gross amount withheld before the application of the Inflex tax credit. Section 14 deals with franchise tax for domestic corporations and basically says that they can apply an Inflex credit towards their franchise tax owed. Section 15 deals with franchise tax for foreign corporations. It says the same, that they can apply the Inflex tax credit towards the franchise tax owed. Section 16 says that the Commissioner of Revenue's authority is a Section 17 gives the Commissioner of Revenue the authority to collect the tax imposed. And then Section 18 deals with confidentiality, and we continue to have some ongoing discussion on this, but what I've looked into since the committee yesterday is that compared to our existing incentives, in Inflex now, there will be far more information that is required to be publicly reported about Inflex regarding recipients and projects than the incentives that we have right now. I know we are trying to balance the need to attract the businesses and keep some of their information confidential, but also get the state the information we need to understand the project and everything that's being fulfilled or not in going forward. But that is a less than brief explanation of the bill, and I'll be glad to answer any questions, Mr. President.
Senator Wiggins, for what purpose do you seek recognition?
Question.
We yield for a question, Senator.
Certainly.
Please proceed.
Thank you, Mr. Chairman. I know you've worked a lot on it. here's my question, to save maybe me referring them to you, and we have a lot of certainly industry in our county. When they ask me about this bill, what's the back of the envelope explanation I can give them, or let's just say the elevator, the elevator pitch that I can tell them, because I'm sure the economic development groups and the industry are going to ask. So what's the elevator pitch on this?
Well, the good news is that they're going to give you their elevator pitch for it, because I had the opportunity to meet with your Jackson County economic developers just a couple weeks ago for breakfast, and they really like the proposal. The big thing about it is just in your packet here, if you are a CEO of a company, you know, the ability to look at this and say, okay, if I expand my business or if I relocate my business to Mississippi, these are the credits that I'm going to get. I'm going to get these credits for the contractor. I'm going to get it for non-manufacturing equipment. I'm going to get it for manufacturing equipment, and I'm going to get it for the jobs that I'm bringing. I think the advantage is that you can easily establish what the incentive is, and perhaps encourage someone in your area to consider an expansion.
Okay, when they ask, how does this differ from what we have now? What's the response to them?
The simplicity.
Okay.
Simplicity and transparency, and hopefully, my hope is utilization. You know, I would love to see this kind of springboard some of those companies in our state that are at a good point right now where they're considering expanding, you know, and when you give them, you know, some degree of opportunity to do that, you know, I think you may see some renewed interest from this. And I'll mention this briefly too, because this came up in committee yesterday. This is all part of a bigger package. With what we did with Office of Workforce Development last year, trying to get that set, trying to get this in place. You know, I've talked to Lieutenant Governor about, you know, some type of branding for Mississippi for incentive and for expansion of industry. You know, I think by the time we get to the end of the process, Mississippi is going to be leading the way in some of our incentives and attractiveness.
Okay, putting on my lawyer hat here. So when they say, hey, Senator Wiggins, that inflex bill, that sounds really interesting, what do I tell them?
It is interesting. You know, and
what
you know,
do I tell
them?
them? What does it do? What's the elevator pitch?
The elevator pitch is, you know, kind of what I was just kind of mentioning, is that it's just going to make it easier for them to apply for the incentive, you know, and it's going to, I think, you know, increase interest in. Yeah, I mean,
Okay.
You know,
Thank you.
You know, thank you, Senator.
Senator Blackwell, for what purpose seek recognition?
Question, Mr. President.
We yield for a question, Senator.
Certainly.
Please proceed, Senator Blackwell.
Thank you, Mr. President, Mr. Chairman. Senator Parker, it's obvious you put a great deal of work into this. I certainly want to thank you for your effort. You referenced the situation that we had with a manufacturer. Not only were they an actual foreign company, but they also had a change in some key leadership, which hurt them in their compliance with this timing of filing reports. Is there anything in this bill that addresses those timelines or provides some sort of check and balances so that these companies don't fall into that pitfall?
Yeah, you know, the hope would be, you know, and this came up in committee yesterday, Inflex is an incentive process going forward. So unfortunately, this is not going to replace or go back or subvert any existing agreements or things that we have in place. But I think just the ease and the simplicity of reporting is going to make this just an annual little thing. It's much like I would attribute it to, you know, something like, you know, having to do your annual taxes, but in a much more simple way. You know, maybe a 1040 EZ instead of a 1040 long form would be kind of a good way to kind of describe how much more simplistic I think this will be for business and industry.
Other questions? Other questions? Seeing none, we're ready.
If there are no further questions, my motion would be title sufficient do pass, Mr. President.
Well,
On the morning roll call.
if you're out of committee, we're here. So, motion made. Thank you, Senator Harkins. Motion been made, utilization of the morning roll calls. Anyone object to the procedure? Anyone wish to be recorded as voting no? Present? Seeing none, passed unanimously by use of the morning roll call. Thank you, Senator Harkins. Thank you, Senator Parker, for a significant amount of work done over months and months and months. And to Senator Wiggins, we had someone in our office looking at this just recently, and we told him, if you can tell me how much you're going to pay your people and how much you're going to put in the ground and how much your soft costs are, we can calculate your benefits sitting here. And it was wildly well received. So Senator Parker, excellent job. Senator Harkins, really appreciate your work. All right, calendar number 2, Senator Harkins.
Thank you, Mr. President. I'd like to go to item number 2, Senate Bill number 2967, and have the title read.
Mr. Clerk, Mr. Secretary, please read the title.
Senate Bill number 2967, taxation, amend or repeal certain tax credits, exemptions, and incentives.
I'll make the usual motion.
Senator makes the usual motion. All in favor signify by saying aye.
Aye.
All opposed, no. The ayes have it. Please proceed, Senator Harkins.
Thank you, Mr. President. I'd like to recognize Senator Parker to explain the bill.
Senator Parker, you're recognized to explain the bill.
Thank you, Mr. Chairman. Thank you, Mr. President. This bill, just like the one I just went through, we went through in committee yesterday as a companion bill to MFLEX. So one of the other things we recognized in looking at all these incentives is that not only do we need to kind of find a more dynamic way to increase incentives via MFLEX, but we have some that haven't been used for a long time. We have some that maybe need to be retooled a little bit, and that's what this bill tries to do here. So this is a tax credit amendment repeal companion to MFLEX. I'm going to walk you through this section by section as well. Section 1 is the employer provided dependent care tax credit. So a tax credit to an employer for the expenses of providing certified daycare to employees is what this deals with. A credit is applied to the net cost of any contract executed by the employer for another entity to provide dependent care, or if the employer elects to provide dependent care on their own, it allows them to offset expenses as a deduction. For this to be achieved, this is a daycare facility that must have at least 6 children who are 12 years of old or less. It's available to any employer. And currently, even though this is a good incentive to try to help perhaps maybe working mothers or other people who are out there trying to wear multiple hats and taking care of their family, this is not being used very frequently. Though child care is an important issue, the desire here is to increase the credit to try to increase utilization. So right now in line 49, this would raise the tax credit from the existing 50% deduction level to 75%. So in this situation, the hope would be that, maybe we would have, a larger industry that might decide to have in a little small child care facility to help take care of the children of the parents who are trying to work, or you could have, an adjacent daycare that's doing that. And I think the higher threshold would move towards achieving that goal. Section 2 of the bill is dealing with the red tax credit. And to give you a little more detail, Mississippi Business Finance Corporation Revenue Bond Debt Service Rural Economic Development Tax Credit is known as the red tax credit. This is the debt service incurred by any eligible business under the Mississippi Rural Economic Development Assistance Program. This uses industrial revenue bonds issued by the Mississippi Bond Finance Corporation and can be taken as a credit on Mississippi income tax returns. This was created to finance economic development projects, and to do this, MBFC issues bonds. The tax credit is equal to the total amount paid to the service of the debt. The income tax credit is also, as I mentioned, known as the red tax credit. What we found in looking in this particular one is that in current law, the language is that the credit can be applied towards both the principal and the interest that's paid, which is being seen as a windfall for the business. And I gave the example in committee yesterday that when I buy new equipment for my practice, if perhaps I buy a $100,000 piece of equipment, I get to deduct that in the calendar year as a 179 deduction. And then going forward, if I decided to take out a loan on that, I'm allowed to deduct the interest that I pay each year on that. But because I had that incentive at the beginning, to buy the piece of equipment, I'm not getting to deduct the principal going forward. And so what this would do in this particular section is it would eliminate the deduction of the principal and apply that deduction to only the interest. And so in lines 168 through 193, that's where we do that. And particularly in lines 181 through 185, we're replacing the word debt service with the words interest expense to achieve that goal. In section 3, we move into the areas that we are repealing with this act. Section 3 involves the clean energy business enterprise tax exemption. As a background, a sales and income tax exemption is available for any 10-year period to certain clean energy businesses that locate or expand in Mississippi and have a certain amount of job creation that they make. They have several exemptions that they're taking on this. This repeal of this would remove this section, and I think we all know that there have been some times where, and there was one particular company that was looking to do this, and it did not work in that scenario. So this would repeal this. Now the good news is that you have the ability for any business like this to qualify and to apply for INFLEX. They just wouldn't have this unique kind of boxed incentive that was set up just for them in statute anymore. So I'm going to go down here and say where we're repealing. So in lines 465 through 476, we're just syncing up some definitions. Line 479, basically through 499, we're deleting all of those references to this section. And then we'll go down a little bit further. I'm going to have an amendment regarding line 656 through 663 I'll bring up shortly that has to do with broadband. But in a nutshell, we're repealing the clean energy business enterprise tax exemption. In section 4 of the bill, section 4, we're just doing some more red bond cleanup, just some small notes there on the red tax incentive. Section 5 involves the research and development tax credit. This is a tax credit that's extended to anyone who's bringing a specific research and development entity into the state. This type of credit will be provided through INFLEX, and this has had almost no utilization since its implementation. So the sections under that are repealing all of that. In section 6, we're repealing the sections related to the clean energy project referenced above. In section 7, we're deleting references to the research and development code. Section 8, we're deleting code sections related to the clean energy project. Section 9, we're deleting references to the same project. Section 10, we're deleting provisions related to revenue collected under the Advantage Jobs Act involving this. Section 11 deletes provision exempting clean energy businesses from the franchise tax levy. Section 12 deletes provisions exempting clean energy businesses from the franchise tax. Section 13 deletes a similar section. And then section 14 through 23 is just code section that's been brought forward. My intent at this stage, I have not yet found any redundant language in there that we need to repeal also. More than likely, because we're going to put a reverse repealer in this bill, I anticipate most or all of these sections is basically coming out of the bill. But the purpose of the reverse repealer is to make sure we don't find any code section that also needs to be adjusted. That is another non-brief explanation of the bill. I'll be glad to answer any questions.
Questions on the bill? Senator Hill, for what purpose you seek recognition?
Just a question on that
Will
first
you yield for
part.
a question, Senator?
Certainly.
Please proceed, Senator Hill.
On the providing child care tax credit that you said has not really been utilized, it's
Right.
increasing from 50 to 75%. What part of the tax for the employer is offset by that credit?
Income tax.
So they get a 75% tax credit on any income tax? Like
Well, they're-
all income tax? 75% of their income tax is gone if they provide this?
No, so
I'm
they-
just curious as to how that is.
Yeah, if they have income tax liability greater than what they're paying for the child care credit. So say you have daycare that's costing you $1,000 a month to run. My understanding would you would be able to deduct $750 of that off of the income tax for providing that
Deduction or
service.
credit? Deduction or credit?
It would be, it's a tax credit, yes.
Okay, so if it's cost, but it's only on the cost of the daycare, not anything on the other part of the
Right,
business?
it doesn't give them that blanket.
Just basically whatever
doesn't
it
go to
costs
other
them to
things.
run the daycare,
Right,
they
and-
can get that cost back.
Right, and it also, it kind of spells it out in that, because this is an existing,
Yeah,
tax credit
yeah.
that we've had. But it says the expenses of dependent care shall include the staff, learning and recreational materials and equipment, and the construction and maintenance of a facility. So if you were a company and you were putting in, an actual daycare there, you could, apply for an income tax exemption towards the
Is there
construction of that.
is there any cap on that tax credit?
There's no cap on it, but there's been very poor utilization of it, so it certainly hasn't been costing the state anything significant.
Thank you.
Thank you,
Senator.
thank you, Senator Hill. Senator Wiggins, for what purpose you seek recognition?
On question, Mr.
Were
President.
you here for a question, Senator?
Certainly.
Please proceed, Senator Wiggins.
Thank you. Back on the child care tax credit, on the federal level, there is for parents, there is a tax deduction that you can take up to, I believe it's $5,000 a year on the federal level for the cost of child care expenses. Was that looked at from the state perspective, and do we have something like that? Because the tax credit you're talking here is for the corporation.
Right.
And there has been discussion that on the state level, we should look at an equivalent of what is on the federal side.
Right, we didn't really get into that. Basically, kind of just give you a little background of what we did, is we looked at all of the incentives that are in place right now. And we tried to say, okay, which ones of these, of the basically 39 of them, are the ones that would, kind of roll into Inflex? Which are the ones that are kind of never being used, that we're trying to remove? And then which ones aren't being used, but we think are a good idea, and we're trying to just slightly improve them. This fell into that category, so I didn't have specific discussions about that, but I think you and I probably share a common interest on that. That'd
Well,
be
that's what
something
I was
would
going to
like to
ask.
look into, but
Would you be willing to discuss that? And I understand there's going to be a reverse repealer put into
Right.
this. And so if our interests are common, I think what we're saying is that for working parents, which we know we have tremendous amount.
Right.
And childcare is extremely, extremely expensive. And I've even had people tell me I would rather stay on welfare, sadly, than go to work, because then I have to pay for childcare. So what is in this bill, it looks like, is we're given, rightfully so, understand, a corporation the tax credit. And I think we need to look at at parents having a tax credit for the child care services that they have to do, like there is on the federal level. And are you
Right,
open
and
to discussing?
I'll be glad to look at that, and I think part of that discussion needs to be too, the tax liability of the people we're trying to help.
Sure,
And so,
of course.
And certainly, in the federal model, a lot of times there are credits that are issued against taxes that were not paid.
Okay.
And I don't know that we want to necessarily do that. Again, I'm just thinking, out of the box here, but if they have some type of tax liability they're paying in the state as an employee, I think, that's a very good point of discussion. And with the reverse repealer in it, I know that section is one that a number of people have questions about. So I'd be glad to, get with you and some of the staff to see if we can find some answers.
You would agree with me that looking at that would help and benefit working parents, working even single mothers.
Right.
Family, two-income families. That would help if we could do something like that for those folks.
I would certainly agree with you, yes.
Okay, thank you, Mr. Chairman, and yes, I'd like to get with you on that.
Okay. Thanks, Senator Wiggins.
Thank you, Senator Wiggins. Senator Simmons, for what purpose do you seek recognition?
Question, Mr. President.
Were you for a question, Senator Parker?
Certainly.
Senator, you're recognized. Senator Simmons.
Thank you, Mr. President. Thank you, Senator Parker, for yielding. And let me first just apologize. I had to step out the hearing or the committee meeting on yesterday, so if you've actually answered this question, please forgive me. Could you go to section 14 of the bill? And this is the section that deals with ports, and I have 2 ports in my district.
Yeah, and so
And so, was
what we're
this
doing on
code?
section 14 is we're just bringing the code section forward there. As of right now, unless we find something in that code section that relates to the other changes that we're making, the intent that I have right now in my working draft is that section 14 through 23 of the bill is probably going to go away. Actually, I considered just going ahead and removing that on the floor today, but because I'm putting a reverse repealer in there, wanted to get with council, make sure that there's nothing in there that we need to adjust because we're making other changes, and so the intent is not to make any changes there, if that's your question.
Yeah, because I know the city of Greenville is certainly one area that has all modes of transportation.
Right.
And also Rosedale, which is also in my district, we are trying to encourage businesses to fully utilize the ports. And so
Right.
I certainly wouldn't want to do anything that would not, that would discourage businesses from using our ports because it's really big in the Delta.
I would agree, and that's not the intent, and that's why in my explanation I just kind of said we're just hoping that because one challenge about any legislation like this, as you know, is you change one thing and then you find something somewhere else, and because something rolls into another credit. We just wanted to kind of have that section alive in case there's something in there that required some type of tooling there. I don't think that there is anything at all. But if there is, I will promise you, we'll talk in detail about that, if it goes to conference, and I do not anticipate any change in that manner at all.
Well, thank you so much, Chairman Parker, for your work. And I will say, before I stepped out of the committee meeting yesterday, I did hear you say that the intent of this is to be performance-based as opposed to promise-based. And I think that that's the right way to go, because we've seen so many situations where we've given taxpayer dollars away and there's just no accountability. So thank you so much, Chairman Parker, for all of your work in this regard. Thank you.
I agree completely.
Thank you, Mr.
Senator.
President.
Thank you, Senator Simmons. Senator Hill, did you have a question?
I do, I just have one more question.
Were you here for a question, Senator?
Certainly.
I kind of tend to agree with Senator Wiggins on, we constantly see corporate tax credits, but we rarely see anything for the actual person who's paying the bill. And I would really appreciate what Senator Wiggins has asked, that we look at that. And also, my question would be, when we're looking at this, especially for businesses with, maybe 10, 20 or more employers, is there any way we could get some type of report? I think the DOR may already have it, but I haven't seen it, as to corporations in the state that have not paid income tax, that are not paying income tax for, X number of years, and for us to analyze, what they're using or how they're being able to not pay income tax. And so we can look, I think that would help with the plan that you're trying to do with this performance-based thing. I think we need to look at how and why we have a large number of corporations that pay no income tax. That might not be a Republican question, but I want to know.
Yeah, and I think transparency is one thing we're trying to achieve through all of this. If you remember last year, I had a transparency bill to try to go back to incentives and awards that were made in the past. We got some of that through, but it basically at the end got kind of watered down. And so with the legislation we have here, we're trying to get more information so that we can look at it going forward. And I'm not aware of a report like that, but we certainly can
I think
request.
Senator Blunt might have a report like that.
Yeah, he probably does.
Thank you.
Thank you, Senator. And I do
Okay.
have an amendment at the appropriate time, too,
Thank
Mr.
you.
President.
All right, the appropriate time.
Okay, I think you've got the amendment on your screen ahead of you.
It's
in
on the
front of
screen.
you. What the amendment does is pretty simple here. We had some questions yesterday about broadband sections of the bill in line 656 through 663. There's two little underlined sections there that will be removed from the bill with this amendment. I'm going to turn there just so I can read you what the actual wording of that is. The wording in both sections is, the new wording was determined by the PSC to be unserved. So that will remove from line 656 and 657, and again, 662 through 663. And then the final amendment will be to add a reverse repealer to the bill to continue to look at this. I'll be glad to answer any questions on the amendment.
Any
If there
questions?
are none, I move adoption of the amendment.
Senators moved adoption of the amendment. All in favor signify by saying aye.
Aye.
Opposed, no. The ayes have it. Senator, you're ready.
If there are no further questions, I suggest passage on the use of morning roll call.
Senators suggest
As
passage
amended.
by the use of the morning roll calls. Anyone object to the procedure? Anyone wish to be recorded as voting no? No. Present? None. Use of the morning roll call is granted, unanimous. Bill has passed. Moving on to the calendar, item 3. Item 4 be passed by Highways, Mississippi Transportation, and also Mississippi Transportation Commission, both passed on highways. Okay, announcements, please. We have some meetings, I believe. Announcements, Senator Wiggins.
Thank you, Mr. President. Announcement and adjourn in memory.
Please proceed.
Thank you. Judd A. will meet 5 minutes after adjournment, and the meeting will be 5 minutes. So I would ask Judd A. members to please gather in room 409. This will be in lieu of our meeting at 3 o'clock today. And then in adjourn in memory, on behalf of myself, Senator England, and Senator Seymour, we would like to adjourn in memory of Joe Barlow, former superintendent of St. Martin School District, and was a very active community member in that area. So thank you.
Thank you. Within 5 minutes, 409, Mr. Secretary. Senator McMahon, you're recognized for announcement.
3 adjourn in memories.
Please proceed.
On behalf of Senator Bryan, Senator Suber, and myself, we would like to recognize Lee County Supervisor Tommy Lee Ivy's wife, Barbara Ivy, passed away this week. In addition, we would like to adjourn in memory of the Reverend James Carney. His son, Reverend Jay, and Demetra live in the 6th District. In addition, Senator Bryan and I would like to ask the Senate to adjourn in memory of Benjamin Bro Logan of Tupelo. Thank you.
Thank you. Bishop Carney was a tremendous person, as is his son. Harkins, Senator Harkins, you're recognized for announcement.
Thank you, Mr. President. The Finance Committee will not meet today.
No Finance Committee, Mr. Secretary. Senator Sparks, recognized for an announcement.
With unanimous consent, Mr. President, I'd like to be added as a co-author to item number 1, Senate Bill 2822 on today's calendar.
2822. Seeing no objection, unanimous consent is granted. Anyone else on announcements? Senator Whaley.
I'd like to ask unanimous consent to be added to item number 1 also.
Item number 1. Seeing no objection, unanimous consent is granted. Senator Kaufman? Same?
Same.
Same. Thank you, Senator Kaufman. Unanimous consent is granted to be added as sponsor on item 1, Senate Bill 2822. Senator Boyd.
Same.
Same. Senator Boyd, Nicole Boyd. Senator McClendon.
Same, please, sir.
Same. Senator Delano. Same. Senator Delano is Skoka. Senator Harkins. Senator Williams. Senator Fillingane. Senator Branning. Senator Blackwell. Anyone else? Senator England. Senator McCon. Anyone else? Would you read those, Madam? Oh, I'm sorry, Senator Fraser. Senator Fraser. Is Senator Norwood up here? No on Senator Norwood. He's fine. Thank you, Senator. Then, pardon me? Senator Butler. Anyone else? Anyone else? Okay, you want to read the names back? Okay. Senator Hobson had called and said we would not have an appropriations meeting today. Senator Norwood, can you cut his mic on up? Here we go.
Thank you, Mr. President. Adjourn in memory.
Please proceed.
When the Senate adjourned today, I'd like to adjourn in memory of Mr. Sylvester Roberts of Indianola, Mississippi, and Reverend Theotry Winters of Greenville, Mississippi. Thank you, Mr. President.
Thank you, Senator Norwood. Any other announcements? Any other announcement? Senator Branning, you had 2 items on the calendar. Did you want to address those today? Okay. Senator Branning passes on 3 and 4. All right. Any other announcements? Any other announcements? Okay. Would you read the co-sponsors for unanimous consent, please, Mr. Secretary?
Co-sponsors on Senate Bill 2822, Sparks, Whaley, Kaufman, Boyd, McClendon, Delano, Williams, Harkins, Fillingane, Branning, Blackwell, England, McCon, Frazier, and Butler.
Anyone else?
I said
McClendon?
McClendon, yeah.
Yeah, we got McClendon. Anyone else?
Gotcha.
Anyone else? Okay, we got a meeting immediately after. One announced meeting, Mr. Secretary, only one?
Judiciary A will meet 5 minutes after recess in room 409.
Thank you. Senator Blackwell, you're recognized.
Thank you, Mr. President. I move the Senate stand in recess until 5 p.m. today, at which time the Journal will show we're adjourned until 4 p.m. Monday, February 22nd.
All of you have heard the motion. All in favor signify by saying aye. Opposed, no. The ayes have it. We are stand in recess.